He's brought the fridge with him this year. I'll let you guys.
So can I just do, am I loud enough without the microphone?
Yes.
Yes, and stand right there.
I need the mic. If I stand right there?
Stay right there.
So, so Marcus, if you have to talk, we can hand it back and forth. I don't know how that, should I clip this on?
Yeah, it's better.
All right.
Is this Ken?
Hey, thanks for having us. I am Ken Ross. I am in a temporary position right now coordinating our legislative efforts for the 2019 session. Normally I reside in personal income tax, one of the program managers. And Marcus is one of our senior policy analysts. And so, you're filming this. All right, cool. So we are here to give a high level, just a quick overview. I think they gave us 30 minutes, and I don't know how we're doing on time here. Shannon, my understanding is Shannon is going to be doing the full-blown version in November, and I'm not sure where or who or whatever. But so just real quick, and Bob has sent us a couple, 3 questions, areas of topics that might be interesting to you all. So if I can do this. So the number 1 question is, what's our tie to federal law? And so we have a rolling connection to tax, anything that defines taxable income. So all those provisions that you just heard about, the itemized deductions, the limitations on SALT, the state and local tax deductions, all the things that went away, the miscellaneous itemized deductions, all tied to it. We are connected automatically to anything that defines taxable income. We do have, they do come in every session and update the date. There are dates, there are certain provisions that we have to reconnect every year. Things like definitions, like our tie to the earned income tax credit is date specific. So as of right now, we're tied to that credit as of the end of 2017. So if something happened in the next month, we aren't automatically tied to that. If there was a federal change to the earned income tax credit in December, we're not tied to it until February when they get back in session, or January this year. So the big thing though is taxable income, that rolling tie. So we tie to everything. We are tied to it unless they say we're not. And this year they tied to everything but one item, and they worked through that in the special session. They disconnected from the 20% deduction for pass-through entity. The deduction for pass-through entities, we are not tied to that. When they went in and did their work on that, when they expanded Oregon's own the deduction that we have, or the reduced tax rate that pass-through entities have, they expanded that to include Schedule C filers, sole proprietors. So it's just that 20% deduction that we are not tied to. Everything else we are tied to.
So how does the Schedule C person get tied into the new tax rate then?
So the question is, if you're a Schedule C filer, how you get tied into that new tax rate. It's an election on the return. When you're filling out the return, you get the option of figuring the tax through, it's either through the tax tables, or if you're taking the reduced rate, you would do an extra worksheet.
So something else for tax layer to screw up.
I'm not going to.
Just thought I'd.
It's a line item.
Well, your software should have that right, because this will be the 3rd or 4th year that we've had that. So, with the exception of the Schedule C.
Because Oregon disconnected from.
Should be right on there. So, any questions about our ties, the federal tax laws?
So, does that mean that they will no longer be able to do a educational credit subtraction?
The tuition and fees subtraction. Because that was an adjustment, you know.
Since that was an adjustment, it was tied to the adjustment on the federal form, which is gone.
It's now gone. Right.
So, does that mean we'll no longer have an educational subtraction?
They, my understanding is are you talking about the deduction for, sorry.
Put it
the
in your pocket.
deduction
Just
for.
hang it on your belt.
Hang it on your belt or stick it in your pocket, one of the two.
There you go.
How about I put it in my pocket? The tuition and fees deduction
Yes.
Yes.
was retroactively,
For last year.
it ended in 2017, but
Right.
they it's good for 18.
It's not according to the tax forms.
According to the federal 1040, that's in the adjustment section, and that is gone on the adjustment. It's no longer
It's
there.
no longer on the 2018
Federal
draft
tax forms. On schedule, it's on schedule, it would have been on schedule 1 of the federal form, but it's not there anymore.
And it's listed in our 4012 as a possible extender that might get
That was
reapproved, et
Yes,
cetera, et
it might be
cetera.
extended, like
It
it
was
was last
extended.
February 9th.
It was extended for 17
17.
retroactive.
Yes, retroactive, but
So,
not for 18.
If it hasn't been extended and it could happen, then, right, we're
It's gone.
also tied to that.
Thank you.
Mark is over there in the dark.
We were all of the movie.
Yeah. All right, so unless it's extended, between now and whenever, because they could do it in February and make it
Like they did
retroactive.
last year.
Yeah. So, we would automatically be tied, if it doesn't come back, it's no longer available for Oregon either.
And I have a question of how to tie to the state and property tax deduction. So it's limited to 10,000 on the federal form. If you carry that 10,000 to the state form and then subtract the state tax included in your Schedule A, you made up with no deduction at all. Is that going to be corrected somehow?
Let's just jump right to here.
Okay.
So the question is, how are we treating the state and local tax deductions for Oregon? Because we are tied to that $10,000 limit. We have created a new Schedule A, an Oregon Schedule A, which will list out each deduction and will not have the deduction for state income tax, because you can't claim that for Oregon purposes.
He can hit the chair.
Can you just turn it off and speak louder?
So on the Oregon, we've created a new Schedule A because with all the changes at the federal level, the higher standard deduction, that means a lot of our taxpayers will not be itemizing for federal purposes. But the estimate is about half of our taxpayers, Oregon taxpayers, itemize. And with I'm trying to remember it was 40% of our Oregon taxpayers itemized for federal purposes. That's going to drop to 15%. But the number that itemized for Oregon is about half of them. It's going to stay about the same. So we created the Schedule A. So we're going to ask people to file that, whether they itemize for federal or not. It will do it won't, if you are wanting to claim state tax, it does it on the Schedule A, so you don't have to do that, subtract it out on the Form 40 any longer. So it'll, if I got that right?
Yes.
Yeah, so the Schedule A will take care of all that. So what you carry to the 1040 is the right number. You won't have to do any netting on the form itself. So does that cover your question?
I'll have to see.
You have to see.
You have to see what tax lawyer does with it.
Do you have a draft of the new Schedule A?
We do have a draft. I did not bring a copy.
Is it online?
Is it available? It's not final. It's not final yet. We do have put a draft. We put a draft out there for the vendors to look at. The vendors have it, so they can start their programming. It should be close to being final, but I don't have a copy.
Could you send Bob a draft?
We could do that.
Yeah.
That'd be super cool.
Okay.
That would be
Yeah, do
excellent,
that.
yes.
So some of the other provisions that just high level for Oregon this year.
Let's kill it. Just turn the
There's an on-off button.
off button on the top.
Or get a hammer.
There we go.
Use the other microphone.
How's that?
Yeah. Plug it in.
So working family credit, they made some changes to that for 2018. Marcus is multi-talented. Okay, is that better? All right, so working family credit, I have to check my notes on this. Made a couple changes that we asked for some clarification on this. One is that when they had written a law that said that it had to be income that was taxable in Oregon. So we clarified that you could be, how'd that work, Marcus? I mean, so under the old statute, if you were an Oregon resident and you worked outside of the state, so it says income earned in Oregon, and we said now it says income that's taxable in Oregon. So you could work outside the state and still qualify for this credit, which makes sense if you live here. It also clarified what the limitations of the credit when it came to income, earned income. So if you're married, it's the lesser of the spouse's income. And the last thing we did is that it clarified that if you are not married, if you're single and you're going to school, you can still qualify for this credit, because under the old language, if you were single and going to school, you didn't qualify. So they expanded it to include that.
Question? Is that going to be effective for past years, or is that just starting?
It's just from here on out.
Yes, the question was, is it retroactive? No, it is prospective, so it's for 18. The 529 college savings plan, just a clarification there, at the federal level, it got expanded to K through 12. Oregon language still says higher education, so it is only for college for Oregon purposes for your subtraction. And then the last bullet on this item, on this slide, some new things we got coming up. With all the changes at the federal level, and I'm not going to lie, it has been an administrative nightmare. This year has been very busy. We realized that with the changes at the federal level, with the basically lower tax, many people pay less federal tax. They went in and they adjusted their withholding tables at the beginning of the year. In February, they had new withholding tables. They created a W-4 form to account for the reduction that everybody's going to, and it just kind of messed with Oregon, because we've always been tied to the federal W-4. If you wanted to do something different for Oregon, you could, but you just submitted a separate W-4 and wrote for Oregon only on the top. To make it work at the federal level, they changed how the calculation for the allowances. So the W-4 gets you to a filing status and a number of allowances. And where you might, under the old law, you might have been married in 4. Under the new law, you could be married in 12, which works great for federal, doesn't work so well for Oregon. So if you went in and you changed your W-4 for the new federal tax law, but didn't submit a new one for Oregon, so you were claiming 12 for both federal and state, you might be under withheld. So
Not might be, that's a guarantee.
yeah, it could be. There's going to be some people that are going to get a surprise when they fill out their tax return next year, and there's just no way to get around that. Either people don't know about it, or know about it and say, oh, whatever, or So, and so we did a couple things. We are working on. We updated. We have a worksheet that we've had around forever to help people calculate their allowances for Oregon. We updated that to take into account the new law. We're creating an Oregon form W-4, so we'll have our own W-4. Because we want to make it clear that we're different now. You can't claim 12 for Oregon and make it work. We will also are creating a online calculator, and it'll look a lot like what the IRS has for their W-4 calculator. And we're hoping to roll those out in early December, so they're ready for the next tax year. Questions on that?
Not on that specifically, but the Oregon kicker. Has it been verified that tax slayer knows how to handle the kicker?
The question is, will your tax software handle the kicker? Well, the good news is next year is not a kicker year. It will be the following year. So you got an extra year to work on it. And honestly, I don't know. You would think we've done kicker a couple times now as a credit on the tax return, so it should be there.
Just change the
Should be there. Marcus, did you want to add anything on that?
Tax letter, no.
Sounds like you guys like them as well as we do.
Well, we do a lot of work with the software vendors, and as with any process, some are better than others. We have a good working relationship with TaxSlayer. I know last year we traded emails, Bob and I, and worked with TaxSlayer on trying to remember the
Special
issue.
Oregon
The
medical?
DHS thing.
The
with
DHS.
The
Medicare waiver payment.
Medicare
Yeah.
waiver payments. Yeah.
So-
Yeah, we have Ken to thank for a lot of resolving that mystery of where these things came from and how they were produced.
I'm not
Yeah,
sure that I can
just
take credit,
fix some.
but thank you. So yeah, so as always, if you're having trouble with the software and you need, you think you need some intervention, or you'd like to come to us and we can help, because we do have a good working relationship. We can't always, it's really everything they do is up to them. We just put the information out there, and they choose whether to support it or not, and they choose whether, if we see an error in how their software is calculating or whatever, they choose whether they fix it or not, or at how soon they fix it. But if you have something, let us know. We'll see what we can do.
We have something, we have two
Question.
somethings.
Okay.
They have an error in their Oregon special medical subtraction, and they have their error in the pension calculation.
The federal
for
pension.
That was one of the issues last year, was the special medical. Did that not get corrected?
No.
What we would
Well,
like them to
partial.
do, just
It's
FYI,
half fixed.
we don't want them to fix it, we want them to take out the calculations and let us just put in the right number.
Well, it would be better if they would
Okay.
fix it, but if they won't fix
They are
it,
gonna
at
fix
least
it.
Okay.
let us,
They're
Let us do it.
we have calculators.
So Marcus is writing this down. So it was special medical, and the
Special-
other one was
the
the federal
pension.
pension.
Federal
Uh-huh,
pension.
Federal pension.
The-
What the problem is, they don't have the background data to do the calcs correctly, they don't capture it, and so they don't calculate it correctly in certain circumstances. So we have to do weird
And
workarounds.
you can't they won't allow you to override that amount.
We have to put in odd numbers
To
to
get
force
it
it
to-
to back
It don't make
into
any
it.
sense to the poor preparer who's trying to explain it to the
If we
taxpayer.
could just put in the right number, we would be happy.
So to clarify, they're both the calculator issues?
Yes.
Yes.
Yeah.
Better if they
Took it out.
took it out
Took
and
it
let
out.
manually enter the
Let us
correct
just
number.
put in a
And just let
manual
us have
number.
the
We
subtraction.
have
And if
calculators.
you'd like, I or Paul or any of us would be happy to show you. It's ridiculous.
We've actually sent them our calculators and said, why don't you put these in your software? No.
Is Oregon unique and with TaxSlayer, or does all of tax? I mean, is that the vendor for?
It's for the
It's
whole
for the whole,
country.
it's all.
We are unique with our laws.
Well, yes, we do
There is
that.
that.
Did you have a
Does
question?
Oregon have a Medicare waiver program?
Yes.
And how do you know that a person is getting payments under this program?
They got a form.
She's asking if Oregon has a medical waiver program, and you see this blank look on my face because I don't know the answer to that. And
We'll have to do that.
It's a yeah.
Well, I thought you
Medicaid.
just said that that was an issue last year and that you got it resolved. So I
We
thought.
do have it, and it was fixed. They did finally get it fixed.
Well,
kind of.
they improved the reporting on it. Last year, what happened was.
Reporting is the issue.
Yeah.
You can do it on the software, it's no problem, but you have to know.
No, which
Yeah.
portion of it is excluded.
Yes.
Right.
And Washington has, their documents will show
Right.
on the pay stub what is Medicare waiver payment, but nothing in Oregon.
Yeah.
Yes, Oregon does on some of them.
Yeah, well, that's not one that I have seen. So, I just have to take a double look.
Yeah.
The new ones are all shit.
Okay, I got one more slide.
It was just the old vendor, they switched vendors.
I want to talk just real quick about the statewide transit tax, and this is the new tax on wages. It started on July 1 of this year, and it's 0.1%, so 0.001 of wages, and wages as are defined in another, basically it's wages that are subject to income tax withholding is the wages. This is a tax on the employee wages, but if you're an Oregon employer, you are required to withhold. So the compliance piece falls onto the employer. If you are in an odd situation that you live in Oregon, but you work in Washington for a non-Oregon employer, they may or may not withhold it. Or you may be a non-resident that you're paying tax in Oregon and they withhold on it, and they withhold too much because you allocate your days. You didn't work the entire year here. You may over withhold. We have created a new form, the Oregon OR1STI, which is a one-page form. I did bring a copy of that. Which allows an individual to do a reconciliation if their employer did not withhold and they should have, or they over withheld this tax. It allows a reconciliation to either pay more or get a refund. The tax itself, when the employer is due quarterly, they have to file and pay quarterly. We have tied this one, if your individual is filing it, we've tied it to the individual tax return. So when they file on April 15th due date, or if they file an extension, you just file and pay then. 0.001 is not a whole lot of tax for most folks. So we thought it would just make sense to not worry about it until they file their individual tax return. So, questions?
Well, so if someone's self-employed, is that something?
It's not subject.
Question about being self-employed and not subject to the tax. It's only on wages.
Okay.
Yeah.
What's the new form?
OR1STI,
Yes, state
the Oregon State Transit.
individual, I think is what the I stands for.
It may not be posted yet.
But it's not up
It's-
there. You
it's
probably
not.
have to.
OR1STI?
I looked yesterday, it wasn't there.
Has this been given to the vendors?
So the question over here Bob's asking is, are we putting that out there for the vendors? And yes, we are. Whether they pick it up or not, it's up to them. And right now, we have heard there are 7 vendors that will support this new schedule, this new form. Tax Slayer is not one of them. But here's the deal. The reality of it, we think that you'll see very few of these because it's very unique. Either they're a non-resident and they're working in this state, and they have to allocate days in and out, or they're a resident working for an out-of-state employer. So you shouldn't see a whole lot of these.
We
We
will
will.
in various places, like in Brookings.
Like a border town.
Yep.
In Brookings, we do all the tax returns for the guards at the Pelican State Prison in
In
California.
California.
So you will see some of, well,
Yep.
And what's gonna trigger it for us? Anything in particular?
the
Or we just have to
question
know?
is there going to be a trigger? And
Look on the-
depends on the software. If they put something in there, I think you're just going to have to know, be aware of it. And we will have an option to file this form separately through our online. It's not near as convenient if you can just hit a button and send it all with your e-filed return. Until all the software vendors support it, that's your option. You can always send in paper. We hate to say that, but it will have an online through our website filing option.
So the question then comes, we do the return, does that mean we can't e-file the return because we don't have this form?
The question is, will it prevent you from e-filing because you don't have this form? And no, it's not part of the e-file package, or like where it's mandatory. That'd be my thought.
So we could
You could
e-file the return and then
send
get
it
in
separate.
and either
Yes.
mail that sheet, that
Yes.
one form in.
Send it separate. It's a total separate tax, which is why we thought long and we debated many hours about putting it on the individual tax return. But the logistics of that and making sure that the money was right, because it goes totally to a separate, it's not general fund dollars, it goes to the highway fund or whatever. It just became easier to do it separate. And the one thing that we did ask employers to do to help not only us but to help you in preparation, is we have asked employers to put in box 14 on the W-2. So, and Marcus, do you remember what the code is? So put an ORSTT.
ORSTT, transit tax.
Yeah. So put box 14 is that box where you can put miscellaneous deduction, whatever, and it could be anything. And you may or may not know what it is, because the employer can make up whatever they want. But we did ask them to use a specific code and to use box 14 for this tax.
So if it's handled correctly for the taxpayer through their job, we don't have to do anything. They don't have to do anything.
That's correct.
Only if it's an exception, then you file this extra form either online or.
So the question was, if the employer does it right, we shouldn't have to, we would see this, we wouldn't deal with it all, and that's absolutely right. So for the large percentage of the employees that you tax, your clients, is what needed to be withheld was withheld, and it's done. You don't have to do anything.
So is this in addition to the Lane County Transit and the Portland Transit?
So the question is this in addition to the transit, the existing transit taxes, TriMet and Lane? And yes, it is. It's totally separate.
And I'm assuming this is also an itemizable deduction as a SALT on the federal Schedule A?
Now the question is it itemized as a state tax, and yes, it is.
So we would have to do something with that about 14.
If they're going to itemize it like that.
I didn't make that up, did I? Question in the back.
So if the taxpayer lives in Oregon and he works part-time in California, his work in California isn't subject to this tax.
Because it's subject to Oregon.
The question is, if an individual lives in Oregon, works in another state, is that income earned in another state subject to tax? And it is, because the tax is on if you're a resident or there's two situations. You're a resident, so all wages earned regardless of where you earn them, or you work in Oregon. You're not a resident, but you work in Oregon, so those wages are subject to the tax.
So someone could be living in another state and have to file this particular page for the state of Oregon as a non-resident.
So then typically if a person that lives in Oregon and works in another state, the wages in another state will not have withholding, so this person will be owing tax.
That's correct. So he said typically if they live in Oregon, work in another state, this tax won't get withheld. And it's the same thing with income tax. We can't require out-of-state employers to withhold. Some do, some don't. But same thing with this. Chances are it would not be withheld. That was it. We were just doing high level, real quick. You're going to get more in depth next month or in some upcoming training, I believe.
That's the one that Shannon is going to do.
Yeah, you can yell at Shannon. We'll give her a heads up.
Yeah, that's a good plan.
Thank you,
Thank you, guys.
Thank you.
We have had really a terrific relationship with the Department of Revenue. No, okay, good.
This just means you gotta look at me instead.
Sarah Adams is the executive director of our partner, Cash Oregon, who we've been partnering with for 12 years now. It's been 12 years now. And we've done an awful lot of things together over the 12 years. Cash, of course, was responsible for helping us initially buy computers and help us get rid of IRS computers in the Portland area. And since then has been supportive of a lot of activities. And I asked Sarah to come and kind of talk about some things that are going on with cash and some ventures that they're involved in, and they will play a role, a really lead role, I think, in the savings pilot that we'll talk a little bit more about on Wednesday. Sarah.
Thank you, Bob. Can you hear me okay?
Yeah, thank you.
Okay, well, it's good to be back. And I think your ranks have grown, Bob, or is it because the room's in a new orientation? Anyways, can't believe you all came back for yet another year, but I'm glad to see you all. I just came to bring you a little bit of news about Cash Oregon, the future of Cash Oregon, and some of the stuff we're continuing to do this year, or new things that we're taking on. And the first one is that we will continue to promote Free File. We do see it as one of those ways to increase access to free tax preparation. And not only do we do this by outreaching through some of our corporate partners directly to their employees, like the Burgervilles and Key Banks of the world, but we're also trying to partner with community colleges to host events where students can come in, file their taxes for free online, but also have a certified volunteer on hand to provide a little bit of support to get through the system. And we do find that community colleges tend to be a unique partner where this type of model does work well. And we've been doing it for a number of years at the PCC, and we're hoping to expand to another campus or two over the next few years as well. Next up, so Bob mentioned savings. For the last few years, we've been trying to promote savings at the tax site at tax time, just seeing it as kind of a unique opportunity where a lot of folks are getting a significant refund. And as many have probably already by now heard, the oft-cited statistic that, say, 40% of Americans cannot handle an unexpected $400 expense without either going into debt or selling something. And as you might further imagine, you know, the number of families and households that could not absorb that expense is even further concentrated in our lower income families, where say only 34% of households making under 40% could actually absorb that type of a cost. So what we've been doing, aside from just kind of passively promoting it at the tax site, what we have found to be the most effective was additional training with our volunteers on one, just how to engage in the conversation. You know, we don't try to be pushy. It's no judgment. We just want to make sure that this information is getting out there, and then also that our volunteers are able to facilitate the actual savings, say splitting the refund or however they may choose to do it. And we did find some good success at the one tax site where we actually provided that additional training to our volunteers. We saw probably a doubling in the number of taxpayers that decided to save a part of their refund. And lastly, we are establishing a new and deeper partnership with an outside organization known as Metropolitan Family Services. And the goal here, or one of the goals here, is to try and integrate additional financial capability services at our tax sites, really with the ultimate goal to open greater pathways to economic prosperity for more of the families and households that we're working with in the communities where we're working. And this year we'll actually be able to bring in some of their staff will come into the 2 tax sites that we run up in the metro area, and taxpayers will be able to access right there on site some of their additional services, which could be financial coaching, credit counseling, credit repair, matched savings accounts. And so we're really excited to see how that takes off, and we'll give you an update next year. And that's all the news I have. Thank you. So now you can go get that coffee.
Yeah. She said it. The coffee is there, and it's time to take a break.
Instead of a free file.